Welcome to the Universal Accounting Center's Advancing Your Accountability with your accounting instructor, Alan Bostrom. In Session 1, Accounting for Inventory Finance Businesses, you'll complete the monthly bookkeeping cycle for a motorcycle business. In this session, you'll learn about flooring and contracts in transit. You'll post to the general ledger. The journal entries have already been made for you. And you'll produce financial statements. To begin this session, turn to Volume 3, page 1.5. Now, with over 30 years of business management and accounting experience, here's your accounting instructor, Alan Bostrom.
1.4 contains a balance sheet. Now, up at the top, you'll notice that it's referring to balances going into the new year, right? Do you see that? So these were the balances as of the end of last year, which would have been December 31st in this company's case. Later on, we'll talk about what constitutes an end of the year, because it could vary for different companies, okay? But in this case, it was December 31st. They ended the years with these balances, and then these will become the beginning balances for next year. Now, I want you to notice down in the capital section, look at earnings, which we're here calling annual earnings. Do you find that? What's the balance there? Zero. That's because at the beginning of every year, we always start out the earnings at zero. One of the last thing we did for last year was take that earnings and transfer it up into retained earnings. Okay? So remember, retained earnings is prior year profits. So we'll always start out the new year with the zero balance. That's what we're doing here. Okay? And our objective with this company, with City Cycle Company now, is going to be to do the accounting for the month of January. Now, City Cycle has a lot of inventory accounts. Do you see those? What do we have there? What are our inventory accounts? Which ones? We got new Hondas? Right? Mopeds. Do you know what a moped is, by the way? Anybody know what it's just a bike with a motor on it. Is what it is, okay? They're not very common here. They're more common on the coastal cities where they have a lot of beach running, or over in Europe, mopeds are still very common. And they used to be common here. You can still get them, but they're less frequent than they used to be. So we got mopeds, we've got used cycles. Why would we have used cycles? That's right. People trading in their used bikes to get a new one, okay? Or to get another newer used one. And so, and frankly, I'll tell you, car dealerships and probably motorcycle dealerships, I'm not as sure of them, but probably them alike, love trade-ins, okay? They potentially can make more profit on a used car than they can on a new car. And sometimes they just sell new cars to try to attract buyers to trade in their old cars, okay? Interesting. I don't think most people know that, but they can. A lot of times that's their bigger, more profitable profit center. And it's probably with cycles too. Okay. And then we have what else? Miscellaneous and parts, right? Okay. Now those are different inventory accounts, probably because in this company there are different different managers over each of those departments. I will tell you that if you were doing the books for City Cycle Company, you would charge between $500 and $700 a month for this business, okay? And so recognize that this is a good-sized business. It's not obviously real large, but it's bigger than the small businesses that we've been working with to this point. Okay, now look at the next page, on page 1.5, and you'll see the complete chart of accounts. On page 1.6, or 1.6 and 1.7, we have the purchase journal. Now, what again was, we just talked about that. What is the purchase journal? It's to record what kind of purchase? Credit purchases. So if we wrote a check just to go out and buy a motorcycle, we wouldn't put it in here. This is only when we bought it on time that we would put it in here. And there's two ways that we can buy something on time in this business. One is a 30, 60, 90-day term, right? Okay, and what liability account does that go into? Accounts payable. 30, 60, 90-day terms. Or we can buy it on a flooring line of credit. And what are the terms on flooring?
With the bank.
You have to pay for it the next day within 24 hours after selling it, right? Okay. Now, by the way, I will tell you that for dealers that have more experience and exposure and so forth, the terms could vary. Again, a longer-term dealer that's been around for a long time and has good financial stability, they might give several days to pay that off. But initially, a dealer's going to have 24 hours to pay it off. Okay? Now, on the right-hand side, we see what we got. Okay? And very often, it's motorcycles and so forth. Now, I want to tell you, these journals are done for you. Is that all right? Yeah. Has it become very mechanical for you to this point? I mean, and if we had you doing City Cycle, doing all that, you'll see, there's a lot of transactions here. We'd be spending the next week just working on City Cycle. It's probably a 2-day effort, two full day effort to do City Cycle all the way from the very start of entering data up through the preparation of financial statements. So you can see it easily justifies that $600, $700 price tag, doesn't it? Okay. Okay, so what we've done is we have entered the transactions into the journals because the principles that we want to teach with City Cycle Company go beyond the actual filling out the journals, the mechanical process, the busy work. Yeah, it goes beyond that. Okay, but let's look at this is the purchase journal. Let's turn the page to the next journal. This is the new sales journal.